Wherever you go, any news coverage you see, what do you see? Recession, inflation, global economy deteriorating, stock market crash, housing and property crashes. The recession is looming closer every single day. Prices of commodities keep going up, living conditions keep getting worse, people are living in abject poverty, and yet on the surface, it seems like it is just a mild problem. Eurozone inflation hit a new record high in August of 9.1%, according to flash figures from Europe's statistics office Eurostat, with high energy prices the main driving force. The rate was above expectations, with a Reuters poll of economists anticipating a rate of 9%. It is the ninth consecutive record for consumer price rises in the region, with the climb starting back in November 2021. Headline inflation in the Eurozone hit 8.9% year-on-year in July. Energy had the highest annual inflation rate at 38.3%, Eurostat said Wednesday, down slightly from 39.6% in July. Food, alcohol, and tobacco were up 10.6% compared to 9.8% in July, with the knock-on effects of recent heat waves across the continent contributing to increases. Non-energy industrial goods, such as clothing, household appliances, and cars were up 5% compared to last year, a 0.5 percentage point increase on last month, while services were up by 3.8% in price year-on-year, 0.1 percentage points more than in July. Welcome to Savvy Economists. Today in this video we are going to be discussing the new values in the global recession incidence. We would also be looking at its impact in other regions of the world and other sectors like the tech industry. Hit the like button and don't forget to subscribe. The Federal Reserve has no room to pivot and reduce rates, and this is why they are raising rates during this recession, said Todd Bubba Horwitz, chief strategist at BubbaTrading.com.
We're not doing what we can do to really prevent the inflation, which is go back to fracking and shale producing, and you won't have to worry about inflation. And the UK and Germany won't be in trouble, and then you could actually enforce the sanctions on Russia. Okay, so everything he said is a bunch of BS and garbage when you look at the bigger picture and what can be done. We should not be suffering through these inflationary times in the United States. We should be able to raise the rates with no problem because they have to go higher because their really nominal rates are still negative, even if they raise 2% at the next rate hike. So it doesn't really matter. It matters on what we're willing to do to create and save ourselves from these inflationary times. People have to understand is what he's really talking about is the Fed funds rate is what the bank's borrowing cost is overnight, not what your loan cost. Your loan costs are usually based off of the 10-year notes. They used to be based off of LIBOR until there was some funny business going on with that, but they're based off 10-year notes. So, it's a premium in notes. So the banks are loving the fact that rates are going higher because their spread's bigger, but it's really the Fed funds rate is based on what banks lend to one another overnight.
Drilling down into national figures, the French inflation rate decreased to 6.5% in August, down from 6.8% in July. The rate was lower than expectations, with economists polled by Reuters having anticipated a drop to 6.7%. Spain also released slowing inflation figures for August at 10.3% year-on-year compared to 10.7% for July, according to the Eurostat flash estimate. Meanwhile, the region's largest economy, Germany, saw inflation reach its highest level in almost half a century at 8.8% year-on-year in August. Estonia currently has the highest inflation rate in the Eurozone at 25.2%, followed by Lithuania, 21.1%, and Latvia, 20.8%. Malta and Finland follow France with the lowest inflation rates at 7.1% and 7.6% respectively. Turkey has cut interest rates in a surprise move, despite inflation running at nearly 80% in July. Its central bank said the cut came in order to drive economic growth. The European Union's so-called surveillance of Greece's economic developments and policy ended on August 20th, as the European Commission and Greek government announced. Official figures in the United Kingdom show that the real value of wages fell at the fastest pace on record between April and June, as inflation outpaced earnings. Venezuelan inflation slowed to 7.5% month-on-month in July, down from 11.4% in June. Thailand's economy expanded at its fastest pace in a year in the second quarter, as eased COVID-19 restriction boosted activity and tourism. Japan's economy grew at an annualized 2.2% in April-June, making the third straight quarter of expansion, government data showed. New Zealand's central bank raised interest rates on August 17th, a seventh hike in a row, and it signaled that further increases will follow. Australian wage growth increased at its fastest rate in almost 8 years in the last quarter. However, pay gains still lag behind inflation. Eurozone economies swung into a trade deficit in June as a result of rapidly increasing prices for imported oil and gas. Namibia has raised its key interest rate by the biggest amount in almost 2 decades. It has made a 75 basis point rise to 5.5%. Norway's sovereign wealth fund posted its biggest loss on record for the first half of 2022. Its value fell by 14.4%, equating to $174 billion. Over 65s in the UK are returning to work as a result of cost of living rises, official figures suggest. The number of employed people older than 65 rose by nearly 175,000 in April-June, hitting 1.47 million. Sri Lanka's central bank has kept interest rates steady, with the standing lending facility rate staying at 15.5% and the standing deposit rate remaining at 14.5%. The European Central Bank will continue to raise interest rates, according to Martins Kazaks, a member of the bank's governing council. Sony on Thursday raised the recommended retail price of its PlayStation 5 games console in several international markets, citing the global economic environment, including high inflation. The Japanese gaming giant said that the price hikes are effective immediately except in Japan, where they will begin on September 15th. Sony is not raising the price of the PS5 in the US. The global economic environment is a challenge that many of you around the world are no doubt experiencing, Sony said in a blog post. We're seeing high global inflation rates, as well as adverse currency trends, impacting consumers and creating pressure on many industries. The company said that based on these challenging economic conditions, it has decided to raise the price of its flagship console. Sony's price hike comes amid a slump for gaming companies including Nintendo and Microsoft, which saw their sales slide in the second quarter as the pandemic-induced boom begins to wear off. Sales at Sony's gaming unit declined 2% year-on-year in the June quarter, while operating profit plunged nearly 37%. The Japanese giant also cut its full-year profit forecast for its gaming division. Sony is also contending with continued supply chain issues that make it difficult to make enough PS5 consoles to meet demand. There has been a notable shortage of PS5s globally. Rival Xbox, which is made by Microsoft, has not yet announced any price hikes. Given the fact that the PS5 has been severely supply constrained since launch, with many consumers unable to buy Sony's latest console, and the fact that Microsoft has shown no indication yet of increasing its Xbox Series pricing, there is no doubt that this price increase will have been a hard decision to make, Piers Harding-Rolls, research director at Ampere Analysis, wrote in a note on Thursday. However, with inflation and price increases being felt through the component supply chain, much of that priced in US dollars, alongside continued high costs in distribution, Sony has now had to pass on some of those cost increases to try and maintain its hardware profitability targets. Ampere Analysis estimates that Sony had sold 21 million PS5s worldwide compared to Microsoft's Xbox Series consoles at 13.8 million. Harding-Rolls said that he does not expect this to put off gamers wanting to buy a PlayStation 5 given demand remains high. While we believe there will be disappointment for some consumers that have been trying to buy a PS5 without success, or that were saving to buy the console just in time for the price to increase, the high pent-up demand for Sony's device means that this price increase of around 10% across most markets will have minimal impact on sales of the console, he said. We expect Sony's sales forecast for the PS5 to remain unchanged. Weakening demand and faster policy tightening in the US and Europe are negatively affecting other major emerging economies, but there are important differences among them. Russia has likely entered recessionary territory, and Turkey and Brazil are expected to experience severe weakening in growth over the second half of the year. However, economic prospects for India, as well as other developing Asia, and economies in the Gulf region are relative bright spots in an otherwise somber outlook. Companies are becoming increasingly worried about recession while the focus of Europe's central banks turns squarely to inflation. So many argue that the reports on global recession are highly exaggerated, while some claim that the real values are being hidden by the Fed to avoid panic by the masses. We would love to know your view about the actual context of this recession. Is it being exaggerated or underplayed? Let's hear what you think in the comment section. Don't forget to hit the like button, subscribe and turn on post notifications. Thanks for watching.